Okay, now let's start off with the first one, the sales ledger control account. Okay, as we already talked about earlier on, the sales ledger will comprise of the debtors, what we call the trade receivables account. So the trade ledger control account will check the arithmetic accuracy of the sales ledger, meaning to say the trade receivables account. Okay, the sales ledger control account are also called the total trade receivables account, or sometimes maybe we can call it the trade receivables control account. So basically, a sales ledger control account will contain all of the trade receivables in the sales ledger, but in total. Okay, but in totals. In totals, okay, the closing balance in the sales ledger control account will equals to the total trade receivable balance. Because how do you get the because this one, the sales ledger control account, is basically a summarized version of this one. Okay, so they represent the same thing, so they should balance. Okay, and because just so you know, because this sales ledger control account is a summary of all these trade receivables add up. That's why they have the same nature as the debtors account. Okay, so the normal balance will be debit. Okay, the normal balance of the sales ledger control account will be debit. Okay, and debit will means an increase. Credit will means a decrease. Okay, now let's take a look at some examples. Details of sales in the sales ledger and the sales total in the trade receivable control account are sourced from the sales journal as shown below. Okay, we get the information to record in the control account from the books of original entry. Okay, so which is the sales journal. So we have already done the sales journal. So if you can still remember, this is an example of the sales journal. Okay, and all these are your credit customers, which we call the debtors. Okay, so you record the debtors into here, and then you will post it to the individual debtors account in the sales ledger. Okay, this one, as you said, the sales ledger consists of the debtors account, right? Okay, now, and then do you still remember what will happen to the total sales? Okay, so when we learn the sales journal, we learn that this one we post it to the individual debtor account in the sales ledger. And how about the total? Okay, the total sales we post it to the sales account, if you can still remember. So the total sales here, which is 1,600, will be posted to the sales account. The sales account is in the general ledger. So credit sales, debit the customer. Okay, and now because this is in the sales ledger, we need to make it up in the general ledger all these debtors information. So we have a sales ledger control account. Okay, so it's all this, but it's in the total. Okay, in the general ledger. Okay, so as you can see, debit, credit, and general ledger, you see, debit all the trade receivables and credit sales. So now practice 1. You are required to draw up the sales ledger control account from the information. So this is the sales ledger. So all these are the debtors, okay, or the credit customer, we call the debtors or the creditors. Okay, now if you are familiar, or if you have very good foundation of the double entry, then you would know this how to record all this. Okay, then this will be an easy topic for you. Because for example, like Act 1, okay, Act 1 is a debtor. Okay, now when you sell to Act 1, okay, you credit sales. You see, the other account is credit sales and debit Act 1 with sales. Okay, the double entry. And bank, okay, because they are the customer, when they pay money to you, okay, you are the seller. Okay, when they pay money to you, it will be debit bank. You will have debit bank, and then credit the Act 1. Okay, he paid out the money, credit bank and debit credit Act 1 and credit Act 1 and debit bank. Okay, and look over here, this is example, okay, of the double entry. So sales return, you see, when you sell to Honey, credit sales, and Honey will have debit sales, okay, sales going into Hanani account. And then you see this is, as I said already, on the debit side is the increase. So when you sell to Hanani, you will increase in the debtors account, increase in the customer owing you, okay. And now if Hanani return the damaged goods, okay, so this is plus, and you see return minus, okay, the amount Hanani owes you will reduce, okay. And similarly bank, when he make payments, so credit Hanani, and then for you we will have debit bank, okay. Discount allowed. No, discount allowed is an expenses. So expenses normally have a debit balance. So discount allowed debit and Hanani will credit, okay. Oh, this is the same. Okay, so let's do it together. So bank. So we are going to have the sales ledger control account, which is a summary of all the trade receivable or debtors add up together. So we have 260, we have 120, and we have no, not 120. Look carefully the bank. Okay, 260, 600, and 300. Let's add it up. Okay, use your calculator. So 260 plus 600 Hanani bank, and then plus 300 Hazika. Okay, so altogether is 1160. And now the next one, discount allowed. So we have $50 plus 25, so we get 75. Okay, and next we have the sales return, only one, so it's 120. Okay, 120. So now the sales 500 plus 1800 plus 750, how much is it? Yep, okay, it's $3,050. Okay, so now after you are done with this, you need to close the account. If you can still remember how to close, you need to add up, okay, to compare the two sides. So this is 3,050. So you will add up, let me just draw this. So you will add up, okay, so this side is 3050. So this side is 3050, okay. Okay, and this side you add up all this 1160 plus 75 plus 120. So how much is it? Is 1355, okay. So you compare these two, okay, you use the bigger one, which is 3050. You write it over here, okay. It has to be on the same line over here. You draw the line for the total box, okay, like this. I'll show you. So this one, you have to give a line. So maybe I'll put a thicker line for this, okay, thick line, okay. And this one, double line underneath, okay, like this, okay. And this one on the same line over here, you do the same thing, okay. So maybe a few minutes here. I'll put it bolder so you can see. And this one, put double line underneath, okay. So you draw the line, okay. This is what I call the total. So you compare these two. This side is 3050. This side is 1355. And so we can already see that the debit side is bigger. So we said that this account has a debit balance. Okay. Now a debtors is asset account. So a debtor almost always have a debit balance. Okay. You can see it will eventually have the debit balance. Okay. So the bigger side, that we even though we translate it as a debit balance, okay, as the balance. If the bigger side is on the credit side, then it has a credit balance. So we compare these two, we write the bigger amount inside. This is 3050, and then this one 3050. So 3050 minus 1355, how much do you have remaining? Yes, it's 1695. Okay, so this is on the last day, May 31st. So you carry down and you brought down on the opposite side. Okay, balance BD. Okay, 1695. So over here you have to write the next day, which is June 1st. Okay, so that's how you close the account, and you can interpret this as having a debit balance of 1695. Okay, 3050 debit minus 1355 credit, so you still have a debit of 1695 debit balance. So how to check the accuracy? The closing balance in the sales ledger control account will be same as all these. This one, and this one add up. Okay, you can give it, you can add it up and give it a try and see if it's equal to 1695. Okay. Now, this is the sources of information for sales ledger control account. It will generally be the same as the debtors account. Okay, it will be the same nature because, as I said already, control account is a summary of the total debtors account. So this one, as I said, they have a debit balance. Okay, so balance brought down will be on the debit side. Okay, you sell, so credit sell, debit debtors. Okay, dishonor check. Okay, so it will relate to here when you pay, when the customer pays, so out from the customer minus bank out or cash out, and then on the other side cash will be debit. Okay, so when you pay out money, your control, your debtors will minus, but if you after you pay out the bank is dishonor the check because maybe the account do not have sufficient fund, or maybe the amount you wrote in the figures and the inwards are not the same, or the signature is different from the bank's record and so on. So you already pay out and then it's being dishonored, so you'll come back here. Okay, and plus, so the debtors will plus again. Okay, plus over here. Maybe how should I put it? Maybe I should put this here so you can see it. So this one here is the plus. Okay, and this one here and this one here is the minus. Okay, because they have a debit balance, so the plus is on the debit side. Okay, now sales return. Okay lah, here sales, when we sell to a debtor, credit sales and debit the debtor account with the sales. Okay, so now if the customer return the goods, so it will be sales return. Okay, you see sales return here minus the amount they owe. Okay, sales return is return inward, so you always see return inward on the debit side, and sales ledger the debtor will be on the credit side. Discount allowed, so you see discount allowed is an expenses, so discount on the debit side, and here it will be on the credit side. So discount allowed here, and if it's withdrawn, it will be on the opposite. Bad debts. Now we haven't covered this one. Another name for this is called the bad debts. We haven't covered this but just so you know, bad debts is when the amounts the customer owe is not, he's not able to repay it. Okay, so we called it the bad debts. Okay, he's not going to repay the amount he owes. Okay, for a long time, and then we decided to write it off as the bad debts. Okay, so this is minus off. Okay, from the account, and then any charges to the debtors, maybe interest for late payment and so on, you have to increase the amount owing, and transfer will always almost be here. Or transfers or contra. What is mean by this, we'll go through this later on. So these are the information we need, and these are the where we get the information. Okay, so credit sales journal, dishonor check is about the check, so it's from the cash book. Discount allowed withdrawn from the general journal. Any charges, general journal. Cash or bank, of course the cash book. Discount will be in the cash book. Sales return journal, bad debts will be in the general journal, and transfer will be in the general ledger. This is where you source the information in for this, okay?